Hey everybody, JD here from the Fireside Trader. In today's video, I've got a master class for you today. Really remarkable action in the market. A perfect demonstration of something we call the true value cycle. If you're not familiar with the true value cycle, let me just give you a real quick refresher course. There are four phases to this cycle. The first, phase one, is when liquidity drops. This is, by the way, the market true value cycle happens every single day in the market, and it is repeated time and time again. And the true value cycle is what creates the arbitrage opportunities that we can trade on a daily basis in our opening bell arbitrage trading service. So it's a very important piece of being a daily trader and someone that's looking for daily arbitrage opportunities that you can exploit. You need to understand the true value cycle. So, four phases. Phase one, liquidity drops. This happens when the market closes. Phase one, 4 o'clock Eastern time, without fail, volume deteriorates. This happens every single day when the market closes. Now you can see here on this chart, right before the market closes, these are volume bars at the bottom of the chart here. And you can see the white line is the 4 p.m. Eastern time close. Look what happens right after the market closes on that day. Volume deteriorates. It drops substantially. This drop-off happens every single day. It is every single stock, every single index. It's without fail. Phase one happens at 4 o'clock Eastern time when the market's closed. And after that point, markets are inefficient. Emotions will run high, the news dominates. But here's the key thing. There's a limited number of buyers and sellers to keep market prices in balance. It's very easy for a deep pocket to get onto that scale and tilt it one way or another. That's when phase two begins. This is what we call the misalignment phase, when inefficiency leads to mispricing in the market. Overnight, when the markets are closed, there's low liquidity. The markets, for whatever reason, become detached from true value. So an example on this slideshow I'm showing happened on August 14th. You can see typically the true value cycle will take us anywhere between 25 and 50 basis points off base, but that misalignment is what creates a big trading opportunity and allows us to target our 10% daily market returns. Because when the markets open at 9:30 a.m., something very predictable happens. That liquidity returns. So this is phase three, liquidity returning. And just like phase one, it happens every time the market opens at 9:30 a.m. Eastern time every morning. Here again, look at the difference between the pre-market trading and the volume bar is at the bottom there. You can see right before the dotted line being the market open, volume is very light. Boom, the bell rings, traders get back into the market, and volume increases sharply, okay? That's phase three. All traders coming back into the market, it's a flood, and that's when efficiency comes back, leading to phase four, what we call the realignment, where futures get it wrong, regular trading opens, and boom, you get a correction back to true value. And it can happen very quickly, just like it did today. So, whoops, I'm going backwards, I think, here. Gradually, during the first hour or so, when the market is open, this is when the realignment to true value happens. But again, it can happen in a blink of an eye. And that's really all I wanted to show you, the primer on the true value cycle. Okay, now let's go to what happened this weekend. Oh my God. G, I should say, right? So, tonight, markets are closed. Volume is minimal. The Department of Justice announces they're investigating Chair Powell. Subpoenas are going to be issued. Geez, a huge event. And the computer algorithms, by the way, seize on that headline. And because there's low volume, they can manipulate the market lower. And that's exactly what they did. Because when the markets opened for futures trading Monday morning, the S&P 500 futures were down some 50 or 60 basis points. Okay? Compare that to my proprietary market scorecard, which utilizes 8 different metrics, blends them all together to come up with a very remarkable, very effective, efficient for what's going to take place in the markets on a given day. Well, guess what? Today, the market forecast, or also known as true value, suggested that the market should be flat today. Futures down 50 basis points, a forecast of flat, that is your arbitrage opportunity. That's what we could exploit right out of the gate. This was a money doubling or more. This was a 75% to 85% winning trade opportunity. And this is why we do what we do, okay? We're only trying to hit 10% on average each and every day that we're trading, some 200 trades in a given year. When you have a setup like this, you have to hammer it. The market opened down 50 basis points, and within 15 minutes, we were 25 basis points lower. About 30 minutes later, we got very close to the flat line, and the arbitrage corrected. So phase 1 on Friday, 4 o'clock, the market closes, liquidity dries up. Phase 2, misalignment. Sunday night, Federal Reserve subpoenas come out, and futures from the algorithms that trade large dollar amounts, by the way, tilt the scales to their side, down 50 basis points in the futures market. When we woke up this morning, phase 3, the market opens, liquidity returns. Phase 4, we get a realignment back to true value. It works. This cycle, by the way, repeats each and every day, folks. And it is a key driver for generating significant intraday trading profits, especially when you accompany it with the power of the Daily Market Scorecard. It really, you're not going to find anything like it. And today was just a textbook example of the true value cycle, the power of the market scorecard, and boom, 75 to 100% opportunity, if not even higher, right? Because look at it. I'm looking now as I record this. The market, the S&P is up 25 basis points. That's a 75 basis points of inefficiency that was corrected intraday, okay? You tell me that the markets are efficient. Yeah, or not, okay? With my little formula here, following the true value market cycle, layering on my market scorecard prediction for trading that day, triangulating a daily opening bell arbitrage trade, and there it is. You can lead a horse to water. I can't make you drink, folks, but I'm telling you, you want to drink this water all day long. This is JD for the Fireside Trader. Take care, have a great day, and we'll see you all next time.